Hi guys, James R, founder of Decisive Trading. Today I want to talk to you about what it takes to become a successful day trader in terms of the markets that you need to trade and the frequency of your trading. One of the things that I get quite a lot through emails is from people. Sometimes I actually get sent lists, so I'll get sent a list of say 10 to 15 different markets, and the question will be something like, I want to become a day trader. Do you think this is enough markets for me to focus on? I'm looking for maybe one or two setups from each per day. When people come to me with questions like that, in all honesty, when most people start trading, it's with the idea that to become a successful day trader, you need to be trading very, very frequently. It's almost like you approach the markets like you're some sort of gunslinger. You know, you want to come riding in on your horse, you want to pull your gun out and you just want to start firing at all the markets, raking in the money as you have successful trade after successful trade after successful trade. You don't also want to miss any trades. So you think by having all of these charts on your screens, focusing on everyone at the same time, it's going to help you become successful faster. It's based around the idea that trading is, I guess people look at it as it should be an exciting career. People bring an expectation and a weight with them that they're going to sit down in front of the charts and they're going to have, you know, that feeling of euphoria, that feeling of they can't sit still in their chair because they're just watching the money pouring into their account. So what I'm going to do is I'm going to look at a few different things in this video. Now, the first thing is when I first started trading. I can actually still remember this to the exact day, to where I was sitting, to what I was trading, to what I did. Now, the first time I had any sort of success with trading, I was still on standard charts, you know, the broker standard charts. I didn't really have any idea what I was doing. I understood support and resistance. I understood how to set an order into the market, but apart from that, I didn't really have any idea to do with technicals, fundamentals, the markets I should be trading, the time frames. And what I was doing is I was sitting in my dad's kitchen. He had a breakfast bar. I was sitting at this breakfast bar. I had my laptop open. I was on the Dow Jones. I can't even remember if the Dow Jones was actually open. I think it might have been pre-market because I live in the UK. I think it was around about sort of midday to 1 p.m. Then the market opened around about 2:30. I was sitting at the breakfast bar, had my laptop open. And all I did was, I was on the 5-minute time frame. I plotted some support and resistance, just looking at the most recent price action. I then dropped down onto the 1-minute chart. Every time the market moved up to that resistance level, I looked for a pin bar on the 1-minute time frame. I then sold it down. When it came to that support level, I looked for a pin bar. I bought it back up to that resistance level. And I just continued doing this. You know, I was only trading maybe, I think it was £2 per point was the minimum that I could trade at that time through the broker. So I was only trading £2 per point. And what happened was it worked. You know, the market has a very, very funny way of, when you come to the markets with a bad trading plan or bad habits, it tends to encourage you at first. I have no idea why, but it's just the general rule. It's going to give you that little bit of success. And so I was sitting at the computer, I was doing this, selling from resistance, buying from support. It was just one little channel running across the screen. It was winning every single time. I think I had about 5 trades, 6 trades in the space of maybe 2 hours just before the market opened. And I thought, that's it. I know what I'm doing. I understand how to trade. This is what I need to do every day. I just set my resistance, set my support, I buy, I sell, I buy, I sell, I buy, I sell. And I just watch the market handing over money to me. Now, of course, that wasn't the case, and what happened was, over the next few days, I tried to do the exact same thing, and I just got absolutely steamrollered. Even trying to trade the 1-minute time frame on the Dow Jones, it's incredibly difficult, but trying to do it based on 5-minute support and resistance over the morning session and the afternoon session before the market has even opened, so there was a larger spread, making it even more difficult. Everything that I made, it was only about, I don't know, 40, 50 pound, it all got handed back. The remainder of my account got handed back. It was only about maybe 200 pounds, all got handed back, and I was broke. And I was sitting there thinking, you know, what the hell just happened there? I was doing everything that I'm supposed to do. I'm supposed to sell at resistance. I'm supposed to buy at support as soon as I see a pin bar. I've watched loads of videos, and that's what traders tell me to do. Well, first of all, I didn't have any idea what I was doing. We have to get that out of the way. But what I was also doing is I was over trading. I was overtrading hugely. I was using very, very simplistic rules as a way to get me into the market lots of times, because what I also noticed is when I was sitting at the computer, I was essentially bored shitless. I was sitting there looking at this screen, it's 5 minutes for a candle to form. And I'm sitting there and I'm watching each candle moving up a point, moving down a point, spiking up a couple points, moving down a couple points, and I'm just sitting there like, what is going on here? This cannot be trading. And that ideology of expecting excitement mainly came from, well, it came from lots of different things. It came from the idea that I had built in my head. And it can come from things like, you watch films like Wolf of Wall Street, or you watch the film Wall Street, you see things like the banking crisis that happened, and you think, well, these guys were, go back to that comparison to a gunslinger. These guys were just, making so much money. They were making it so quickly. They were just doing whatever they wanted. They were buying, they were selling, whatever it took to make this money. Now, that picture has been reinforced a lot by what I call, I've said this a couple of times now, what I call Instagram traders. I'm actually going to start using that term a lot more often. I try to sort of avoid talking about anyone else, and I'm not going to talk about anyone specific because I don't like to do that, but Instagram traders, you all know what I'm talking about. It doesn't just need to be Instagram. It can be, in fact, there's two different ones, I'll tell you. Instagram traders, where they're posting up pictures of their Lamborghinis, the Ferraris, the rental Ferraris, the rental Lamborghinis. They're posting pictures up of the mansion that they've hired on Airbnb for the weekend, so they can market to you this idea of fast cash from trading. They market to you the idea of excitement. If you're looking at somebody in an exotic location, standing next to a convertible Lamborghini, talking to you in a video about trading, what message is that trying to get across? It's trying to get across the message of money and excitement, and mainly fast cash. That's what it's doing, and unfortunately it does sink into your subconscious. You can't help it. Advertising is designed, or advertising is used because it works. How many times have you watched an advert and it's got a jingle, and then a day later, 2 days later, you notice you're sitting in the car humming along to this idiotic tune? It's because it works. It's because it gets into your head. So that's building up that false picture of trading in your mind. And then you go on to things like Twitter. Twitter, it has every trader. Every single trader you add on Twitter is a professional trader. They're all making money. It's every single one of them. I don't know how the statistics of such a high failure rate don't count when you suddenly go onto Twitter, because everyone on Twitter is a professional trader. And what they're doing, as you see on Twitter over and over and over again, is people posting up trades. Long hair, short hair, blah, 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 whatever. This is my entry, this is my exit, blah, blah, blah. And you'll very often see, now I'm not talking about everyone, I have to stress this, I'm only talking about a segment. I don't want to offend people who are not doing this and they just so happen to be on Twitter and posting up the trades they take. It's not my intention at all. The only people that annoy me are the select few that I am trying to talk about, who encourage this. So they post up all these trades, and you see some things like, maybe they'll have a bot, a trading bot, even easier, even faster and more exciting. You don't even need to be sitting at your computer. You can let their robot do it for you and make you all this money. And it'll post up maybe 5, 10, 15 trades in a day. And so it's, when you're seeing this, if you're not trading that frequently, and this person or this trading bot, you look at it and suddenly you're looking and it says they have 15,000 followers, or on their YouTube channel they've got 20,000 followers, subscribers, whatever. You start to think to yourself, well, this person must know what they're talking about. So I must be doing something wrong because I'm not trading that frequently. And then you go on to maybe Instagram or even Twitter, whatever, YouTube, where they're posting up the videos, and you say, well, this guy's standing in front of a Lamborghini and he's only in his early 20s. I'm also not having that kind of success, so I must be doing something wrong. And what you tend to gravitate towards is that you need to start working harder. And by working harder, I mean you need to start attacking the markets. You need to start trying to make that money faster and faster and faster. And it all adds up to disaster. You know, it's all these false messages coming into your head. So you could use the term fake news. It's fake news. I can't believe I'm quoting Donald Trump. It's fake news, all going into your mind. But eventually some of it leaks in, especially if you're having a hard time with trading. You want to be successful, so you start to gravitate towards the pictures, the messages, the sounds that keep attacking you from all directions. You know, if you go onto your Facebook, if you're interested in trading, Facebook now has these sponsored ads that target you. And because I run a trading channel, obviously a lot of what I do is look at trading stuff. Every third or fourth thing on my Facebook page, no matter how many times I click, I don't want to bloody see this, it's not relevant. It's all about people telling me how they can make me money if I join their subscription, how they made however many hundreds of %. You know, it's all geared towards making it even more difficult for you to succeed as a trader, because instead of focusing on the trading, which is difficult enough as it is, you also have to focus on blocking out all of this fake news, all these messages that are trying to get into your head and change your thinking and drag you toward what they want you to go toward, which invariably involves you typing in credit card numbers, subscribing, buying their scanner software because they're telling you they're going to make you a millionaire, make you a successful trader in a few months. So what I'm going to do is I'm basically going to tell you what it takes, in my opinion, to be a successful trader. So it's exactly what I do, what I look for. It doesn't mean that this is the hard facts. You know, there's different ways to trade. I'm not denying that, but this is how I approach trading. It's what I try and drill into the people who entrust me with their education and who want to learn from me. This is exactly what I promote. When I come to the charts, I come with the mindset that I don't want to trade. I come with the mindset that I've got money in my trading account and you're going to have to literally break my arms. You know, I'm holding this account. You're going to have to break my arms to get this account out of my arms. Unless I see something that is perfect, I am not going to risk this money, because I've lost money loads of times with trading. I've seen my account just plummet when I've started emotional trading, when I've started over trading. So I trade one market. I trade the FTSE 100. I also look at Australian dollar, US dollar. I analyze it, I set it up every day. I give the subscribers the tools they need to approach that market in the way that I would approach it. But 95% of my trades come on the FTSE, 5% come on Australian dollar, US dollar. When I start the trading week, well, the best way to do it is, how frequently do you think I am looking to trade the FTSE 100 each week? Once, twice, 3 times, 4 times, 5 times, 6 times, whatever. Well, I'm sure it's going to surprise you. When I approach the charts each week, I am looking for one trade the entire week. That's it. My maximum I will take is, let me get this right, the maximum I will take is 2 trades in a day. So what it means is that when I'm approaching the market on a Monday, I am prepared to do nothing until the Friday when that perfect setup appears. It means if nothing appears on the Friday, I'm prepared to just not take any trades. What I'm looking for is to make the 1%, so, or whatever you're risking. You're risking 1 or 2% per trade. I'm looking to find that trade that will make me what I'm risking. So if I'm risking 1%, I want to make the 1%. That's all I'm looking for the week. Now, that doesn't mean that I only take 1 trade per week. I will take any of the setups that I deem to be perfect. And sometimes that means I'll have 4 trades, 5 trades. Sometimes it means I'll have 2 trades. Sometimes it means I'll have 1 trade. Quite a lot of the time, especially in August, I have went through weeks. Last week, I had no trades Monday, Tuesday. I had a trade on Wednesday, and I had a trade on Thursday. And then there was another good setup on the Friday. But when I am sitting on the Monday and the Tuesday, the difficulty is that my mind is telling me, you're not going to get any trades here. And also, I'm going on holiday next week. So I'm also got that thought in my head, you're not going to get any trades here, and you're going on holiday next week. So you're potentially looking at a 3-week stretch here of no trades. And all that is my mind trying to trick me into taking those imperfect setups. But the problem is when you start doing that, you start making mistakes, you start losing money. You know, it's the more you trade, well, you know, first of all, survival. The more you trade as a beginner, the main thing is trying to survive. And then the more you move or transition from beginner into intermediate, you start to learn the things that you're doing wrong. And one of them is going to be getting tricked into trades and over trading. So I come to the charts, I'm only looking for that one trade per week. If I only get that one trade per week, risking 1%, that's 4% per month. In a year, it's over 40%. If you're risking 2%, that's 80% a year. That is, you know, phenomenal returns. And what it's also doing is it's taking a lot of the stress away from me, because I could quite easily sit at the charts every day and maybe have 2 or 3 charts running. I could find 4, 5, 6 trades. But I know through experience, not only from me, but through evaluating hundreds and thousands of traders, and through looking at all the professionals and seeing what they can consistently do, that if I am making between 40% and let's say 100% in a year, I am a professional trader. I am in that top percentile of traders returning the best results that you can consistently do. So when I'm over trading, when I'm trading 4 or 5 times, all that I'm doing is increasing my stress levels, having wins, losses, you know, a run of wins where I'm really elated, and then I'll have a run of losing trades where I'm really depressed and I don't want to trade anymore. And at the end of it, if I'm still trading perfectly, I'm still going to be between 40 and 100%. So what is the point of me putting all that weight on my shoulders? The only reason to do it is the belief that I can consistently make huge amounts of money. And it tends to be, unfortunately, the people with the smaller accounts who follow that approach. And the main problem with that is that they are the ones, because they've got the small account especially, they need to build that discipline early on. Because as their account starts to grow, they need to have the good habits to hold the account. Because if you've only got a small account, you build it up to a relatively large account, and then you blow it again, you've only got that small account to start with again. Because if you're starting with a small account, it likely means you don't have the money to start with a larger account. So if you get up to 15,000, 20,000 account, you're thinking, okay, this is getting good. This might be something I can do for a career. But your trading habits are bad. You're doing something like I was doing on the Dow Jones, just buying and selling and buying and selling from that one little level of support and resistance, no real idea what I'm doing. The market, it gives lots of people that push, who are trading badly, and you see their accounts growing, and they'll maybe turn it into that 20,000, that 25,000, but the habits are bad habits. Because you need to think about trading in terms of years. If you want this to be a career, it can't be short-term views. It has to be long-term. And what happens is it gets up to that 25,000, they think they're doing everything correctly, and then they just get slammed. Something happens, things start to go wrong, the account crashes, and suddenly they're back at that £200 account, £500 account, £2,000 account, whatever it may be, and they have to start again. And what tends to happen then is they go back to those bad methods because they've seen that growth. But this time the market just won't let it happen, and they'll just get chopped and chopped and chopped and chopped. What's better to do is focus on steady growth, building your discipline, building your trader mindset, and watching your account grow slowly. So the main things I'm trying to get across in this video, I do quite often have a little ramble. I have been told by my girlfriend that I ramble sometimes. That's just the way that it goes, I'm afraid, guys. What I'm trying to get across is the way that I trade. I only look for one trade per week. I will trade more than that quite often, but I'm not looking to take multiple trades in a day. And by doing that, it changes the way I approach the markets. It makes me much more focused. It makes me much more disciplined. It allows you to only take the perfect setups. You get this fear of sort of missing out, as I mentioned earlier. You know, I'm going on holiday, I might not have a trade for 3 weeks. But all you need to do is start to watch the markets week to week. Start to mark down the perfect trades. Not every single setup. The perfect trades that have the, you know, a huge probability of being successful. Everything lines up that you look for. Those trades. Start marking it down. Start separating those from your other results. And then start looking at it together and start thinking, okay, if I had just traded these perfect trades, how often would I be trading? And you'll see maybe maximum once or twice per day. And then you take your other results, and I can guarantee if you compare them, by taking this one, you will almost guaranteed have made more money than by doing the trading that you're currently doing, the overtrading. Or if not, you will be at the exact same level. Over the long term, you need to do it over the long term, you know, 6 months minimum, a year if you can. You can even go back and back test it, look at your results, look for the ones that were the perfect setups and pull them out. And you will see that that is the way that you should be trading, to not only to grow your account, but to protect your mind. I mean, trading can really cause you a lot of heartache if you are over trading, if you're trading poorly, if you're having to suffer large drawdowns. So I really encourage you, go and have a look at your results, or just start marking up from now. Look at the perfect trades rather than the over trading, and start to ignore Instagram traders. Start to ignore those traders who are, you know, promoting that flashy lifestyle, and just focus on what it is that you want. Your goal, no doubt, if you're watching this video, is to become a successful trader. So start focusing on what the professionals do, how the professionals are growing their account. Don't pay attention to the people who are trying to market you something through fast cash, through fast cars, big houses, big results every day, because all that's going to happen is you are going to continue feeding the machine. You know, by over trading, all you're doing is putting some more money into the market for the professionals to take off you. That's all that you are doing. Okay guys, so hopefully that was helpful. Hopefully I got the message across that I was trying to get across through all of my rambles. As always, I hope that was helpful. I'm James Orr, and thank you.